99. Apple misses EPS. Wow, that's the first time. I think a lot of people are expecting that one. We're trading at 99.62. Apple right now 99.57 and following. Not going to bode well for the Qs, which as you look at the NASDAQ futures, 44.27. TIP is down. Everything in the futures are kind of in meltdown mode. Welcome to wacky Tuesday turnaround earnings, erroneous earnings day. Not boding well for technology. What we're going to discuss today is obviously some of the ways that we come up with trades in our different indicators. Now, what we've been doing, folks, is we've been giving out some sessions on Thinkorswim. And you know what? Many of you were here when we've done these, what we call customer appreciation, and using various indicators for or how to utilize Thinkorswim in multiple ways, apart from the person's indicators. How many people were in attendance with those webinars, just out of curiosity? Did we get some people? All right, great. So I want to make sure there were a couple people. Many of you are familiar with the person's pivot, the PPS, and the person's pivots. And some people had a question, where's the blue line? What's the purple line? And, you know, different platforms. And that's why I thought we come up with what the heck is these, what are these indicators about, and where do we get them, and what do they do? So that was the big push for today. And what do I do to select for stock scans? Now, again, as a trader, you're never going to bat 1,000. We all know that. And as a joke, we have a lot of my friends here in the community and members of our trading room here. One is Twitter. So we didn't get Twitter right. But we also were looking for a big reversal coming in XRT, and that's the retail select sector. And we are looking for to see some of the, in the next few days and coming weeks, to look for a concentration of buy signals in retail apparel as well as consumer discretionary. Ironically, today we've gotten a few that popped on the screen. Coors, Coach, Restoration Hardware, even Ford is up, and Ford is one that we had selected from a week ago. And so first, before I begin, how many of you were curious or had questions that were not answered about how to get PPS and the difference of the person's pivots on Thinkorswim? So we have a nice audience today. Thank you for joining us due to earnings, erroneous earnings Tuesday, and the historic Apple miss, right? I mean, that's, I think, the first time in how many quarters they've missed. It's something of a fluke. So, two-part question. Who had questions that we didn't get answered on TOS that would like a quick explanation? Because if not, we're going to skip TOS and go right into the other platforms. All right? Going once, twice, 3 times, great, awesome. Okay, so everyone's pretty much understanding. First and foremost, let's go for a second here and discuss a little bit about an important risk disclosure. Trading is risky. So if someone tells you to buy Twitter and you're guaranteed to be a gazillionaire because Google's going to buy it out for $4,595 a share next week, that's an untrue story. We can hope for that, but that doesn't mean it's going to come true. So trading is risky. Stops do not normally limit your losses. So make sure everyone's aware of that. Trading is risky. So what do we do? Well, a lot of what I've done, and I think a lot of people are very familiar with this particular book right here. Candlestick and Pivot Point Trading Triggers is over a decade old. This book single-handedly introduced people to what the acronyms you may see on my tweets between LCD and the other acronym is HCD. These are trading systems, and these are phenomenal scans. We also, in that book, developed, as it says here, HCD, LCDs. We also included the formula behind the person's pivots and how it doesn't just give you support and resistance, but it helps us to dictate the market condition, whether it's bullish or bearish. It's actually an indicator as well as projecting support and resistance targets. In addition, we have the PPS indicator, and many of you have already said that you use to run for use in Thinkorswim. And then we came out with this book in 2012, and I can't believe it's almost 4 years, Mastering the Stock Market. This book here for stock traders was fantastic in the sense that we first started the very first chapter off with seasonality of stocks and seasonality of sectors. That was pretty important, especially in the time when seasonality wasn't all that popular. It was this book here, the Commodity Traders Almanac, that I first shared authorship with Jeff. And we came up, and what I brought to the table was, since more people were trading equities and with the advent of ETFs, I introduced this concept that we have a correlation between stocks to underlying commodities. Ironically, we did a presentation with Cindy Faber, and she said, oh, we have this time frame where Hershey's, HSY, the stock symbol Hershey's, HSY, has a tendency to go up. Well, I invited her as my guest, so I didn't feel like interrupting her, but the funny thing is, that was something we covered back in 2007 in the first issue, and it was on page number 37. What it is that during that time of the year, besides being a trade with cocoa sales because of Easter, but it's also an inverse relationship between the profit margins, as cocoa has a tendency to decline that time of year, and cocoa manufacturers, when their raw major product, sugar, cocoa, goes down, the profit margins go up, especially when you have a just historic global holiday such as Easter. Easter bunnies or chocolate Easter bunnies are made everywhere. Paris, Germany, you name it, anywhere that they celebrate Easter, it's an incredible eating binge. Plus, if you get the real devout Catholics that give up chocolate for Lent, they gorge themselves Easter Sunday. Trust me, I know. So there is a rhyme and a reason for certain markets to move with supply and demand. This has been one of the natures of my existence of trading. It first started with trading treasury bonds. Certain times of the year, investors flock to buying bonds. Certain times of the year, they don't. So this is the kind of stuff that we've done to help us to generate trade ideas. And what we do is we put some of those trade ideas every week in what we call my weekly thoughts and observation. Many of you have probably received that already. This is this week's. I put this out every Sunday. A couple things of what we are looking for. We talked about last week. We were talking about the knob spread, both the notes over the bonds, and this is that knob spread. I just wanted to show this data to you because it is kind of important. If you are a long-term trader of treasuries, if you look at this chart, this is actually the bonds, this is the treasury notes, and this is illustrating that last week on a weekly basis we formed that low close doji pattern that I talk about. I'm suspecting the knob spread to weaken back into longer-term uptrend support and over area of old highs that we had back last summer into December. I mean, I'm not really looking for a major downside move, but from 35.5, a 5.5 point handle drop should bring the bonds back into the 158, 157 handle. Today we traded just at around the 161 level. I wanted to go through some of these other concepts with you because these are, as you can see here, folks, this was actually created, I started writing some of this on the 22nd, and I finished it Sunday at 4 in the afternoon. So a lot of thought work analysis goes in it. This is an interesting concept of including the person's pivots. What this red line signifies, and this is the S&P, so I think this is very relevant in today's market session and relevant with what we see going forward. So this is kind of important. We're in a PPS buy mode, that's that green arrow, on a weekly basis. The market's trending higher. The moving averages are going up. I have a confluence, which means more than one time frame. I have quarterly and monthly pivot resistance targeting further potential upside about between 2 2.75% to 3.25%. In other words, we could see the S&Ps between now and I'm suggesting by mid or the third week of May, or May option expiration, let's say, I'm expecting the S&Ps to reach that level. Why am I doing that? Well, it's not just because we have that PPS buy signal. It's not just because the person's pivots indicator is suggesting there's a moving average component, blue is above gold, suggesting that the time frame is bullish. We look at what's called the condition of the market. And the condition is based off a volume indicator, OBV, and breadth, which we look at the advanced decline relative to the S&P 500. So if I'm trading S&P 500, I want to look at the breadth of the S&P 500. And it's funny because as of Friday, the S&P 500 had a weekly breakout to the upside. In addition, it came on strong volume. So basically, this shows us that there's strength in numbers, there's more participation in stocks going up, not just a few heavyweight stocks dragging the market down. We have recovery in majority of stock sectors. And I'll show that to you in just a second, what I mean by that, majority of stock sectors, okay? In addition, this is something that is unique that a lot of people don't maybe pay attention to on a week-to-week basis, but I'm going to go through it for you right now. This is the Commitment of Traders report. This reflects three, and I'm going to repeat that, three categories. The three categories we have listed in red are commercials, those are hedgers. We have large speculators, which are considered hedge funds, and then small speculators, which is the retail trading public. Now, I'm not going to say it's a sad story every single time, but the majority of time they tend to get long in the market, and the market continues to move down. And then just as the market starts to pop up, they go short the market, and then they see a market rise. And then they decide on the market moving down, then they decide to get long. And then as the market makes the low, they get aggressively long and double up their position. And then as the market starts to move up, what do? They get out of their longs and then they go short. Ouch. So this isn't just this year. This is a consistent situation that we pay attention to. So if you take a look at the recent data, hedge funds were short. They've been liquidating their short positions. It was the small speculators who added to short positions last week. So this suggests to me, with strong volume and a good participation in the broad-based amount of stocks moving up in concert with this price move, and speculators being short, there is some further upside left in the market. So for those that are new to trading, these are not just moving averages. Anyone can throw up a moving averages or a MACD or a CCI or any plethora of multitude of indicators out there that measure price, like relative strength index, percent R, Williams percent R. We want to look at the stock market. If I'm trading the stock market, then folks, I want to look at the overall condition of the stock market. Does that make sense? Of course. So here's the story. I put out this information. What's been really ruling the roost, okay? And I think that we have biotech down 14%, financials still down a little bit, but if we get an upside move a bit and we start to see consumer discretionary stocks, the XLY, XRT, and apparent department, that's when we need added fuel to support the notion of higher prices. So we don't have daily buy signals as of yet, but these are some of the names that we want to kind of look at, because these names actually enter a seasonally strong period of time coming into May. What happens in May? It's not just May Day. You got what? Graduations. You got proms. Kids need dresses. Little Johnny's going to graduate 8th grade. He needs a pair of new shoes. He grew out of last year's shoes. Kids do that. Little rugrats. They grow on you, right? They don't grow on you. Well, they grow on you both ways. They just grow, right? So they need new clothes. And then you got Mother's Day. And then, you know, you got weddings, or you got something going on, and, you know, spring changes. You find out in the closet that your suit doesn't fit. You've gained some weight. And maybe you need to order Nutrisystems, or maybe you're going to decide to get on Weight Watchers. So, you know, spring comes about with different changes and different sectors start to appreciate. What I like about this concept that we put out, guys, is that it's a seasonal trade, and not only that, we can start to scan for that. So anyway, a lot of work goes in here, different stuff that we put out, and that's why even last week we had a couple things. Retail, one of our bullish signals for the week, Kohl's, of all department stores, Kohl's showed up last week as a buy. Coach, several notable signals showed up. PayPal, Best Buy, just to point out. Some of the weaker signals were, of course, bonds, so a bearish signal was TLT. Utilities, these three names populated, Simon Property Group and REITs, and then these two, AT&T and Comcast for communications. So a lot of these names right here for energy, Noble Group, PNC for the financials, and then as natural gas has generated a buy signal, it's out of this whole list, it just hasn't done anything. Now, as a disclaimer, we actually bought Ford last week, so we're long from a daily signal from on 418. I didn't intend to share this with you, but I always ad lib things, and the reason I started to share that with you is because we have a lot of changes today, and to pick up where we left off, kind of with Thinkorswim and the PPS buy signal, I wanted to bring this into focus today because I know a lot of people have multiple charts and they have multiple platforms that they use. By the way, currently Apple is now at 97 and change. Takes the sting out of a few things. So let's take a look at the scans today. Now remember, I've already teed it up for consumer discretionary stocks. And one of the things that I've got down here on my focus is I'm looking for buy signals. So what do? I went down and I go down to license study and I find PPS, it stands for Person's Pivot Study, buy signals. So I went for buy signals. And as you may or may not be aware, one thing that I've done before, and I'm going to just do it real quick, if you right-click on the header here and go to Customize, if you're not aware of this, if you scroll down and you go to look under I, you should find Industry. Where'd it go? I just had it. Just had it. I hope you guys saw it because it was here a minute ago. Where'd it go? What did I do? What did I do? Where did it go? Industry. If you click on Industry, add the item, which I've already got, right? If you add the item, and I'll just remove the item because I already have it twice, and then just hit OK, you will find Industry gets listed on your columns. So what's neat about this kind of gives me the idea that I can run a scan and find out what's generating a buy signal today. So let's say I'm looking for, and I'm stalking, and I want to make sure that my research is good. What does that mean, my research is good? It means that I had a suspicion that we're going to start to see retail apparel pick up, department stores. I want to see testifiable evidence of that. I don't want to see the stock up 5 cents, 10 cents, 50 cents, $1. I want to see buy signals, and I want to see a concentration of buy signals over a period of time. So let's say today's now Tuesday. We run a scan today. What did we get today in buy signals? Well, it's funny, but we did get Penske Auto Group. You got some automotive groups, Asbury Auto. You got a lot of automotive stocks that really surged today. How much of a surge did we get? CarMax was up 4.68%. We saw a Penske Auto Group up 11%. So yeah, those are going to generate some buy signals. But so that's showing me that there is some buying coming in to the market. That's not a small move, of course, right? Bed Bath & Beyond got a bid. I call this man's most hated store. And the reason Bed Bath & Beyond is man's most hated store is because one reason. During football season, you want to sit in, you want to watch a game, and it's near Thanksgiving, and your wife says, we need a new tablecloth and napkins for all the guests. I need you to come to the store with me. And where would they go? Maybe Bed Bath & Beyond. And you miss the last most exciting quarter of a football game because you had to go and buy new napkins and tablecloths for guests that are coming over. So with that said, that's why I label it Bed Bath & Beyond, man's most hated store. So actually, it's up about 2% today. We're starting to see not just small moves, and not just penny stocks, but Sonic Automotive. So we can sit here and quantify what specific specialty retail stores are moving, right? So that doesn't share, this concept means strength in numbers. It's not just a few lucky names. It's almost the entire automotive sector, some big names that are populating. If you go on down the list, you've got other names, some names you probably aren't familiar with as you get down here, but there are a lot of small cap names, and that's probably weighing in on what? The Russell. Anyway, this is the connecting of the dots of how we kind of look. We can see restaurants here. You see Sonic, Ruth Chris's, Jack in the Box. I don't see Chipotle Mexican Grill. And then as we move on down the list, textile and apparel luxury goods. I'm not looking for, a lot of names. Michael Kors, here's Kors, up 3% today. And so I'm sitting here going like, well, I see auto component stores. Well, today was an auto day. Obviously, there was a big auto day push today. The funds pushed the button to buy some of these, auto stocks, because they were up a lot, 3%, 5%, 1.5%, 2%. So a lot of stores in here were up. Also, I noticed Leggett and Platt Furniture Company, Lazy Boy, another furniture company. So we are starting to see the spending of, or at least the investment dollars going back into retail. And that's something that this supports our thesis that if we are going to see the market lift off, we've got to see retail push its weight higher. So let me show you a chart here, guys. I do this a few times. This is top 20 sectors. XCI, that's going to take a hickey today because of Apple, Twitter, the XCI's computer hardware technology sector, and then again the XLK, which is blue over here. So tomorrow it's going to take a little hickey. But what I want to share with you is this. Back in January, if you look here in January, this is the horse race, the starting line for the year, okay, for the top 20 sectors. In January, we had one sector, utilities, positive on the year. And everything, remember when the famous bank analyst said, sell all your stocks, get out of the stock market? He said that somewhere around here. It wasn't the first day of January, it wasn't the second, it was somewhere closer to the middle of the month. He said, get out of the stocks, it's getting ugly. Well, if he said get out of biotech, it may have saved you, about 10%. But he said get out of utilities. If he said, for example, get out of consumer staples, he sold the low. He sold pretty much everything right in that time frame was on the low. What's the difference between January and today? Well, quite frankly, we only have about 1, 2, and we're going to have maybe 4 sectors negative on the year. Only 4 are negative on the year, and the XLF and the KRE, which are regional banks, can get positive pretty quickly. So we've seen what's called a leadership change. Now this orange line happens to be XOP related stocks. XOP. I mean, who would have thunk it was going to go from negative 22 to positive 19% in a short order? A few people. This is what I look at to give me a real look-see of the strength of the market. You want to talk about strength in numbers. This is the type of analysis that gives you, rather than listening to the boob tube and listening to other analysts, their opinions, this gives me testifiable evidence that there's strength in numbers. We're starting to see more sectors get positive, right? More sectors getting positive, and the ones that are positive are getting even more positive, and it's more sectors getting positive. That is not a bad thing. That's a good thing. So let's get over here real quick to this package we put together. Many of you are TradeStation. I don't want to be dissing my buddies at TradeStation. So at TradeStation, we got a couple things that we look at. And I want to show this with you today because this was kind of impressive. all right? The advanced decline, real time, the advanced decline in the S&Ps just made a new high. The Russell, the IWM, just made a new high. It just broke out, made a new high. The New York Stock Exchange Composite Index, it just made a new high. While the Dow did not, volume's looking good. The NASDAQ, even though we're going to have a bad day tomorrow, thanks in part to Apple, Twitter, it is going to probably not be as bad as one thinks unless the rest of the sectors, and this is a large cap stock weighted sector, so there's going to be some influence there. But there's still, what's going to be confusing for investors is this. Just because we see some technology going down doesn't mean all stocks are going to go down. In fact, I think there's a strong chance that still, with a rise in moving average, with a concentration of an uptick if we get more volume behind this move, we have a real strong shot of seeing another 3% move to the upside in the S&Ps. What takes that analysis off the table? Here's what takes that off the table. We need to close under the last 3 weeks' lows. That would be bad. So a close, giving it all back and some, okay? Closing underneath that strong shelf of support. If the breadth of the market pulls all the way back, taking that level out, and if it comes on volume. Now, at that point in time, you will be seeing and firing off. See these arrows? Those are PPS sell signals. You're going to be firing those off on a weekly basis, and that's going to be bad. I'm here to tell you. All right? So it's not just the price indicators, it's the condition of the market and the volume. So I think what we are going to see happen, though, is I think, and that's what today I wanted to share with you, they're still in the process of running. I have multiple scans that I have. And we put scans for a reason. For example, one scan is how many buy signals came out of today's price action. And what this scan does is it tells me, it's more like a continuation type pattern. Did we generate a buy signal when the weekly's in a buy mode? So that would be like, let's take a look. What's the concentration that we have here? Big lots. I'm just going to point on big lots. So big lots, as you can see, folks, this is kind of cool. It's been in a weekly buy signal. That's a PPS weekly buy signal. It's also in a monthly buy signal because there's a monthly chart, a weekly chart. And yesterday generated, or as of today's close, excuse me, it generated a buy signal. So big lots, while I don't know if I'm going to run out tomorrow morning and buy this stock after it's gone from 36 to 47 and it's at the near the top of a range, right? I would look at this and say it's one more retail store. It's one more retail store that you put on the checklist that we're starting to see buying come into. So what I want to do is I want to look at how many stocks are and what sectors are they coming into that's giving me a decent, low-risk, high-reward opportunity. So here's an interesting one. This is called Restoration Hardware. Now, Restoration Hardware is a kind of a trade. I'm already in this, right? And we had this orange candle, which signify, if you know my work, and a high closed doji. That is a weekly high closed doji. It's also a weekly PPS buy signal. Market got smacked down hard and heavy. I mean, you want to hit this thing, it got hit with the ugly stick and then beaten up some more when it was down. It just is brutal. But one of the things that is sharing with us is that the volume looks pretty appealing because the volume snapped almost all the way back up to when prices were around 89. We're in a weekly buy, and today we generated a daily buy. And this is a stock that's been doing this kind of like migrating a little bit higher tepidly, a little bit higher sideways, and then today it kind of broke out of a little range it's been in. So what we're looking at is we're thinking that this stock has the ability, the minimum objective over the next 4 weeks is looking at 52. Now that's only a $7 move to the upside. But it's in the infancy stage, number one, and number two, it's in the right sector. So we're starting to see better names, or at least some decent setups coming that we can get a little bit better if I'm going to get long a stock, I want to be in a stock that's, at least intermediate term moving up, and I want to start to see that trend reverse. And we are starting to see that trend reverse. So Restoration Hardware, obviously, it's not, I don't think we have a massive risk on this one that they're going to pull up a lumber liquidators move. But needless to say, this is the kind of thing that, I like to look for when I'm running scans to say it's not just what ran a buy signal today, it's the concentration of the sectors over the next couple days. So let's say tomorrow I run my scans and all of a sudden I get a lot more names in this space, right? And that space would be retail, and it's specifically, I think that's the sector we want to, I think, can help lift the overall market that people aren't seeing. Everyone's looking at Facebook and everyone's looking at technology names, and in the meantime, people have missed things like Caterpillar, CAT, or let me just point it out to you real quick here. A lot of people have missed a lot of these top shelf sectors like the material sector, the industrial sector. I mean, these are not small moves. So what this indicator package does for us, it actually does a few things. And I'm going to take your eyes over here. I'm going to just go off subject for a minute. This is a TradeStation's radar package. And what's really cool about this, I want you to kind of focus your eyes on this column right here. First off, this is pivot point for the month. These are our sector ETFs, the top sectors. Now, I want you to look at this column, and I want you to focus on this column. And I'll get to this over here in just a second. What the resistance column says is it tells us if it's red, it means that this particular instrument is already trading at its predicted person's pivot resistance. So let's see if that's true. I click on XOP, and as you can see, here's a weekly chart, and guess what? That's our monthly pivot, and you can see that the stock is trading pivot resistance. That's the XOP. So that's kind of nice to say, okay, give me a testifiable condition of measurement. Is the stock market overbought? Do we have all the sectors? Are they trading at their respected resistance? I mean, if everything's at resistance, it probably might have a struggle going even higher. So when I share this information with you, take a look at this. I've got XOP and red. Gray means that it's already exceeded its monthly resistance, and that's the GDX. All right? The other gray line here is XLE. Look at all of these other sector ETFs. No one's really, except for maybe, who is that? The ITB is the only one, the ITB, the only one else that's trading. Is it ITB or is it XLF? I think I skipped a line, guys. It's XLF. The XLF, the financials. It was one of the crappiest sectors of them on the face of the planet 2 weeks ago, and it's already at person's pivot monthly resistance, which means it rallied. Now, what this tells me is that we don't have a heavy concentration of every sector at resistance. It tells me that there's still room that these sectors could go up. They're not quite overbought. That's what that analysis shares with me. And that's pretty cool. Now, what's at support? Bonds, TLT. So bonds are going down. They're beyond support. How do we know that? It's gray. So I want to know immediately and locate what's happening, what's generating and firing off brand new buy signals or sell signals for the month. And that's what this column kind of teaches us. How many buy signals are populating for the month? By the way, I just clicked. XLV is going to generate a fresh new buy signal for the month, if the month of April, which concludes Friday. And that's going to probably give us maybe some follow through to the upside if we go back up and just test the highs of last July. considering the fact we've got a little upside in the momentum here, and we have some increase and uptick in the volume. That's pretty interesting, considering the fact that the two, remember what I shared with you just a minute ago, guys? Remember that a minute ago, we just looked at a chart that said, wait a minute, XLV, that's over here. It is positive. What would happen? Gain some more momentum and goes up. If the XLV gets more positive, if the XLF gets more positive, if the regional banks get more positive. So yes, we could see a downturn, and there's no doubt, and help lift the market overall benchmark S&P 500 higher. It could do it without the heavy lifting of the big old-fashioned tech names. That's what that means. And so I'm using technical tools. Once I understand this is my work, this is how I put together the person's pivots and culminate trading ideas. It helps me to define whether or not there's value, and if there is value, is there concentration by running scans to help me determine where are these buy signals coming from and in what sectors, right? That's, to be honest with you, this is something that we identified back in January when nobody was paying attention to this. These scans, we found out that a lot of preferred bank stocks were getting bought out. That's why you don't have a sector in here. These are preferred names, and you could see whatever, a lot of these. But we were seeing Wells Fargo, BB&T, seeing a lot of the preferred stocks being bought up that were offering anywhere from 5.75% to 8% on a preferred stock. They were buying bank preferred stocks. Now, if you feel like the stock market's going to crash, the last thing that you want to do is buy a bank stock. But they were buying preferred stocks, locking in yield, and that, my friends, was what was happening back in late January, early February. In fact, we tweeted this out to the masses. We've already done webinars on it as a result of that finding. So our scans are able to do something that I think is really neat. Come up with our own independent research and find out before it hits the news and everyone else what's really going on as far as a sector is concerned, and testifiable evidence of what markets are moving. So yes, there's all ways of trading the market. You can look at an individual stock and you can track just one or two or a handful of stocks, but you know what? Let's face facts. This market has been a one big sector rotational grind. It's like get into transportations, get out of transportations. Get into financials, get out. Get into consumer discretionary, get out. Get into biotech, get out. And it's been that kind of a market all year. Buy utilities, now get out. And what's neat is that running scans like this has been able to help us to get ahead of the game before it happens. By the way, just to share with you live information, this is today's little scan that we've created. Show me how many stocks are generating buy signals near pivot point support. Now that's a very specific, logical scan. What does that mean though? That means maybe the market went up, it had a pullback, and then it's generated a buy signal after a pullback. And it's pulled back to what? Support. And if you notice here, what's the heaviest concentration of buy stocks so far in this list that you see? Financials. A couple in healthcare. And then let's get into this right here. This little thing called the services. So we've got Sonic, and you know what that is. That is the guys that make incredible milkshakes according to their commercials. We have another one over here, Darden Restaurants. So we're starting to see maybe some of the restaurants come back. But what I want to look for, is apparel. Here's Dick's Sporting. I want to start looking at Dick's Sporting, by the way, is an ongoing buy signal. And there's your little upside. It's exporting, by the way, for tomorrow. And I'm really focusing on to find out, are we getting these retail stocks going? That's what helps me to determine where should I start to focus in on some money going into tomorrow and the next day and get it to work, so that if the institutions are buying it, then I want to run that trade, because that means they're not going to be in it just for an hour or a day or two, right? And so generally, if they're pouring the money into it and all of a sudden they start to add money all week by buying and adding to their position in other names, we're going to be able to pick that up. So these are kind of the scans that we're able to focus in on. Now, I did run, like I say, I run these scans every single day, and if we go over here to this word called format, you'll see that it is scheduled at 4:15. It hadn't quite finished. As you can see, we're running buy signals and sell signals. And so I can actually find out in a given day exactly where the strength or weakness is on basically a concentration of areas. And then I'm able to say, okay, maybe I get so many, instead of buying an individual stock, I just want to go with what? The sector ETF. So that'll help give me a little bit better testifiable concentration, like I said, where to put my money. Now, scans are great. And here's Ford, by the way, generated another little daily high close doji. It didn't really have a downturn. I want you to focus on Ford right now, because it's, we joked about it in our trading room when we got into this last week, and everyone shared their own little acronyms. Fix or Repair Daily is the more popular one, FORD, Fix or Repair Daily. It really had a very strong volume accumulation here. A buy signal, it pulled back, and all of a sudden it started to move in accordance to what we have seen time and time again, especially even on the short term. It's something that would populate even on Thinkorswim and our other indicators. But here's what we start to see, is that a market that gets near pivots, the stronger pivot support, and you start getting buy signals, well, it's not the trade that's going to generate, wealth that we could buy our Bel Air mansion. It keeps us on the right side of the market, and we have low risk. Now, let's take a look at this chart for just a minute and look at this in detail. There's a couple things that I have on this chart that it might look familiar. First and foremost, you have the pivots. We'd already discussed that. Next, we have the PPS buy signal. And we got these color coordinated candles, and I'll get to that in a minute. And then you have this volume. And then my favorite volume trend indicator, OBV. And then we have this little histogram, right? So this histogram kind of helps let me know, is the market running out of steam? Is it hitting an upside target? Is it starting to run out of steam? And in this case, I have to say, yes, it's starting to run out of steam. So let's say you bought the stock and you're long from here, and the stock has a little bit of run up. Or you're long from here. You bought it on a PPS and you bought it on the open, and you're long and the market's moving up. One of the neat things about one of the work that I did, and many of you might remember, this came out in this book right here, and I want to discuss this. It is the last conditional change. I usually have the acronym LCC, last conditional change. Now, this is something that is only available on TradeStation. So when we look at the TradeStation indicator, I want you to look at something that's on the charts. You see these white lines? You see the white lines, the white line, the white line, the white line right here? Okay, a magic thing has occurred. As it's been in a buy signal, the market, even on its pullback, didn't take out that white line in the sand. That white line in the sand is 1340. So if you're long, that is what's called the last conditional change. And we use that for two purposes. A, we use that to help identify where our stop loss should go. And B, if the market should take out that and generate a sell signal, it gives us a more defined reversal signal. So The last conditional change is very important indicator, the LCC, as we call it, the last conditional change. It identifies a change in trend and the market's continuing up. And it helps us to identify if the market's truly strong, it shouldn't get below the white line in the sand. If it's truly strong, and it paints that picture automatically until a new one occurs or until it fails. So Ford, by the way, needs to defend and take out the highs or continue up and not take out 1340. So for tomorrow, if we were fortunate enough and got a little bit of a pullback in Ford, you know, somewhere in between 55, 60, something like that, as long as it does not take out that 1340 handle, we have a shot that it could see a continuation to the upside. Now, if you're not in the trade, and you got to admit, the trend has already had a little upside move, right? And after all, this is just Ford. It's not like a high velocity stock like Biogen or something like we're seeing move in Apple or Facebook. But if the market takes off and takes out these highs, we could see a breakout, and the next stopping point would be 1466. So why do I like this? Well, remember, we got a lot of scans today in the automotive sector. So maybe the secret is people aren't spending money advertising on Facebook and buying Apple. Maybe they're buying cars, right? So maybe consumers are spending. They're just spending it on certain things. So consumer discretionary and the XRT, this is a part of that component in that family. That's why I want to focus my attention and my capital to certain trades in that space. And that's what this indicator and the whole thought process happens to help us with. So that's kind of an important discovery in our research and how to maintain a trade when it moves up. So what we've put together in TradeStation, when people say, John, what the heck is this? Is a lot of information. Well, a lot of the information is something that I've created over 30 years of trading, 35 years now. All the indicators that we have, we've put together what PPS is, high closed doji, a low closed doji, and that last conditional changes I just described to you. We have filtered pivots, daily, weekly, monthly, quarterly. That is pretty cool, quarterly. Now, toss, might I add, Thinkorswim, we did something really unique for options traders. What we did on Thinkorswim was state-of-the-art. No one had ever thought of it. Since markets don't really expire at the end of a calendar month, they expire at what? Expirations. We created option expiration. And a lot of your big name companies, large cap, your Facebooks, your Apple, a lot of them really migrate towards trading in between their option expiration pivots. Unfortunately, that's not available on the Versions Pro package with TradeStation. Now, every different package, every single different trading platform has their positives and their negatives, right? Some are better than others. And what we've been able to create, at least in TradeStation, as you can see, pre-selected scans for both buy and sell signals really help determine a really more quantifiable, really cherry pick the right stocks and the right sectors if our suppositions are correct, and we can kind of pinpoint those areas that we want to focus in on. Next, on the radar screen, as I showed you, it gives us those signals alerts, and then it also gives us, as I shared with you, the price and then location of the price to the pivots. Remember, if everything's turning red, it means we're already at monthly resistance, and that to me, if the entire sector or a segment of the S&P 500 and all those sectors get near pivot resistance, I'm going to say, hey man, I'm going to be focusing on more sell signals than I am buy signals, right? Here's an interesting thing. Back in early January, and the world was very an irrational time period, and the equities were moving down, and there's no doubt about it. And everyone was thinking that the S&P was going to crash and go to, some people were calling for 1,400 in the S&Ps. The funny thing is that our indicators were firing off a lot of red, showing that a lot of the sectors of the market and a lot of individual stocks were at both monthly support and that quarterly support. So it was telling us that they've already stretched and they were at support targets. So it's kind of hard to get bearish when everything's at support. So this is a monthly chart. So as you can kind of take a look, I mean, can you imagine, this is at support, that green line in the sand. How am I supposed to sell when it's at a green support? Yeah, it's sold off. I get it, but it's already at the support. I'm just picking XLV. I mean, we could go and change this to XOP, for example. I mean, I didn't even quite get to support, right? This is January. How am I supposed to get bearish? It already sold off. You know, the funny thing is everyone was saying that the market was going to sell off, and, you know, some of these sectors had already peaked out a year earlier. Here's another one that many of you might remember, IYT. This is kind of funny. The transportation sector, it peaked out in November of 2014. It didn't just crash and dive. You wake up January 8th and, oh, look, transportations are down. They crashed. No, they already had peaked out. What they did, though, is a lot of the individual names in the transportation sector came right at their longer-term support and stopped dead in a dime. That, to us, to our community, we identified that, not because I'm lucky, but because this indicator helped us to identify markets were already overstretched and to overstretched at support, and we should start looking for buying opportunities. So I'm going to be doing the opposite when I start to see everything starting to hit at resistance. Now I'm going to take you through a little walk. I want you to look at this column right here, resistance, and I'm going to scroll down there. And if you look at, like, say, home builders, XHB, man, it's like they're in no man's land. Look at Leggett & Platt is 3.87% away from its resistance. It's about 6% away from its monthly support. So it's in the middle almost, a little higher to resistance. It's not there yet. In the materials, look at this percent distance. We're 1% away from Dow, but we're 4% away from BHP. I mean, look at the numbers that we have here, right? So if you don't want to look at the numbers, then we could just kind of quickly look at the sector and the color. Gray and red means energies are already at their monthly pivot resistance. It's probably overstretched. Financials, as we already covered, already at resistance. Regional banks, a lot of them are filling up at resistance. Insurers at resistance. Broker-dealers almost at resistance. Credit cards, almost at all resistance. The industrials, well, we got a little ways to go in industrials, don't we? Technology, that's going to be tricky for tomorrow, but when you look at this, between Google, Microsoft, who is that? Seagate Technologies, and then Apple in the pre-session, we were already beyond support. It's 100 right now. So a lot of the technology is underweighted and undervalued. We go on down the list, consumer staples. Man, I got room to run in a lot of different sectors. And then consumer discretionary. Aha, wait a minute. That's what John's been focusing on. We look at the consumer discretionary and say, hey, some of these names aren't overbought and they're still in uptrends and they're all in pivot status as bullish. So that gives me a more testifiable evidence. And what about that XRT person was talking about? What's going on in that sector? And as you go down here and you look at this and you go, wow, it's not really overbought, and you got some stocks like Lulu and Nike and Coors and, you know, some of these names and Coach in there. Boy, they might have a little bit more upside left in them, especially as we get into maybe looking at some of the department stores. Now, biotech, man, we're there. It's all gray. Looking down at transportation, it's mixed. Gold miners, you could say they're already at resistance. Home builders, ITB, we got room to run there. Property REITs, it's kind of mixed, but we have room to run there. Casinos, kind of mixed. Social media, kind of mixed. And then we get down to the foreign market ETFs, and we could say, gee, we're mixed there too. Finally, restaurants, and we could say some are down like Chipotle Mexican Grill, and some are near resistance. But other than that, we can take a quantifiable idea where are the markets in relationship to their targeted pivot resistance. And if everything in the S&P 500 or a lot of the stocks we say are at resistance, it probably is running out of speed. And at this point in time, the month ends this week, and we still have, and we're going to create new monthly pivots as of Friday's close, guys. So we're going to probably have a little bit, if we close up in here, and thanks to Janet Yellen and team tomorrow, if she doesn't rock the apple cart, and we don't get a massive liquidation in the overall markets as I gave you, right? These indicators are suggesting that, you know what, we could still see a run for the roses, no pun intended, with the Kentucky Derby on Saturday. We could see a run for the roses to newer highs as we enter into May, and that's what I wanted to focus in on, you guys, all right? This is pretty dynamic stuff that many of you have never seen before, right? And that's that radar screen. This is the proprietary momentum histogram, the volume indicator that we put out, our advanced breadth indicator for major indices. This is why we call it the Person's Pro package, because for someone who's a very active professional trader, this really gives you hands-on information of where every sector and stock is in their location to their respected support and resistance targets and whatever that time frame. So here's the best part. For an option trader, if I see that there's more upside, I can kind of select how much percent change the market could go. Helps me select maybe what the market needs to move. Helps me to figure out my option strikes and potential strategies. This is the trading app store. Now, for TradeStation people, if you are a TradeStation customer, you can go and get the Person's Daily Pivots for free. Just click on the install in the trading app store. If you happen to be looking to try the advanced trading system, you can try a free trial right there. Just click on free trial, where it's $159 a month. Now, if you want just the triggers, it's $79 a month. So if you're Thinkorswim, you get the pivots and the triggers for free, and Thinkorswim saves you boatloads of trading capital to apply towards your trading. But if you want to take this to the next level, I do want to try the Person's Pro package. Let me explain to you. It comes with the complete scans and the package of indicators we just told you. It's a lifetime fee. It's $3,500. It's a one-time fee. You get support and trading is included with a one-year free membership in what we call the PUG group. PUG is not a dog, even though the acronym is, it sounds like it is, but it stands for Person's User Group. We get together. It's a members-only meeting designed to give mentoring to those who purchase this indicator system. We record it, and the recordings are available. So I wanted to go through and share with you guys how do we come up with a lot of these trade ideas that we've tweeted out, which we've tweeted out some really awesome stuff to help a lot of our trading members, and also to give us an edge in the market to find out what's the next big shift that might be coming into the market, right? And I think that's really the key, is to be able to say it's nice to be in the right sector of the market. If it works, you go for the little ride, and if it doesn't work, you know where your stops are and you know how you're out. That's the kind of cool way of trading. There's always different ways to trade in this market, and we know that. Some people like to just sell data. Some people are option strategists, but if you're looking for direction, if you're looking for concrete evidence of market moves, then this is a consideration for you. It's an investment in your trading. Now, again, you can get that if you're a TradeStation client by going to the trading app store. If you like what you hear and you're not a TradeStation customer, then you need to call our office at 561-655-1881. You can visit our website at personsplanet.com and then ask and click in there, contact me, and let us know what you're interested in, and we'll get back with you. So I think that the way that we've been trading this year and the volatility back in the fourth, unless the Fed comes out and says tomorrow free interest rates for the rest of your life, it's going to continue to be a kind of a volatile year, and it's going to be, I think, what I've been defining to our members is the market's been kind of like think of it this way, like a locust, a swarm of locusts that goes and attacks a farm. It eats it up until there's nothing left. And then it moves on and goes to a different farm. Sucks it dry, moves on to another. And that's what the market's done. They've gone from one sector, run it up, suck it dry, get out, move to another. It's just been one sector gyration. And meanwhile, everyone's trying to handicap what's going on. I mean, think about it this way. NASDAQ's down, the Russell's up. Growth stocks are back in favor. Bonds are down. Gold is up. It's a little bit kind of crazy, but yet institutions are putting money to work. They're just doing it and using sophisticated tools, and they're doing it quickly. And that's that seeking alpha on steroid type concept. It is not, no doubt, it has been a tricky year for most traders, but I think overall we've done a phenomenal job in selecting the right sectors. With that said, how have we gotten lucky? We work hard and we use these tools. But that's exactly how we've done things. Today I hope you got some ideas, at least from the standpoint of XRT. We'll see how that plays out. Watch those other segments of the market like the department store, retail apparel, as we enter in May and June. And if you're like me and you can't fit in a bathing suit, perhaps maybe we need to take a look at Nutrisystems as a stock investment, or at least buy into some more GNC and for health pills. I'm just joking around. It's one of our community signature jokes. But both of those, GNC was a trade that we took, and it was kind of one of our stock selections based on these scans. So with that said, everyone, I hope you got something out of today. At the very least, you walk away knowing that we don't flip coins here, right? At the very least, you know we don't flip coins here. There is rhyme and reason to what we do. And everything that I created on this package right here at TradeStation, and everything that we created right here on this package at Genesis, both of these were concepts that we've built based on the teachings and the books that I've written over the last couple decades. So anyway, with that said, I bid everyone a great rest of the week. Until we meet again, that does conclude our session today. Thank you so much, everyone. And again, I am coming, Bob Pott, thank you very much. As a quick reminder, I'm going to actually be in Boston speaking to an investment group in Boston this Friday. So I am looking forward to being in Beantown this week. If you're in Beantown, if you're in Boston, Cambridge, and you want to know more about what time and where I'm going to be, simply send us an email. It's info@personsplanet.com, or visit the website at personsplanet.com, guys. Just go over to personsplanet.com. I'm sure you've seen the website, right? And then just go up there to contact us right there. Contact us right there. Say, hey, where's John going to be? Or you just want to say, hey, I want more information on that pro package. What's it about? And we'll get you that information. Thanks, everybody. Have a great evening.